I thank the gentlewoman, and I now recognize myself for 5 minutes for questions. We wanted to have this hearing and talk about the dynamics in the market. Frankly, how do you accurately assess risk, and how do you price risk? It's clear that losses are getting more frequent and larger. When you think about insurance, you have to be able to price that in. It costs more money. It happens more often. How in the world don't prices go up? They have to go somewhere. If you look in California, they decided they were going to impose price controls so that you can't raise premiums. And also, you can't drop customers. So you go on site and you say, you know, the gasoline stored in the outbuilding next to the pine straw next to your wood house is a risk. We'd really like you to mitigate it. No. And then the insurer still can't drop the customer? Are you kidding me? You have to be able to price risk. So part of the goal of the recognition of the ESG code that apparently is going to go out of fashion, if I listen to Larry Fink, just don't call it ESG, but we're still going to do it. They'll come up with a new label. It's a shape-shifting ideology. But the reality is we are dealing with more frequent and bigger losses, and a lot of those are looking at environmental places like California and wildfires, like Florida where it's weather events, flooding, hurricanes, and in my state, you know, more often it's tornadoes. But if you have to price that risk in order to stay in business, the alternative is things like the National Flood Insurance Program, where we have actually drafted bills we've had hearings on, and we're working to get towards a markup this year. But they don't have to make money, right? They don't, and they don't. They lose quite a lot. The federal government offers the flood insurance program because insurers can't really accurately cover all those things. So it is a supplement to the market, and the federal government is involved there. Terrorism risk insurance, another thing the federal government gets involved in. Overwhelmingly, it's a state issue. And I think the best thing to think about is housing as a state issue. You have different planning and zoning codes because, frankly, the risk of earthquake in California is bigger than Ohio. And we like the idea of building codes. We don't want things to happen in America like happened in Turkey because they didn't have big building codes. You know, we should trust that our buildings are resilient for the area they're built in. But too often, when regulators decide that they're going to be the ones, central planners are going to decide instead of the market, they get it wrong. And they oppose one-size-fits-all rules that don't accommodate all the flexibility that markets need. Prior to coming to Congress, I was in manufacturing. And for me to get the supply chain right, for me to design and build something, I needed some lead time. I can't turn, some things we can turn around quick, but some things take a little longer. So, Mr. Bohr, when I think about manufactured housing, part of the way that we make it affordable is it's manufactured on site. All the planning and zoning for electrical and plumbing and whatnot can be done there, and it's regulated by HUD normally. Now we've got Department of Energy dropping in something that is not only hard to comply with on the timeline, but it disrupts the regulatory certainty that the industry needs. Could you talk about how that impacts your ability to deliver an affordable product?
Yeah, we're really uncertain where we're going to be heading from the requirements given two overlapping but very different regulators if the DOE process continues. And I want to be clear, I mean, we're not talking about not moving the ball forward on energy efficiency. We're talking about doing it in a holistic fashion where the impacts are thought through. And we can make great strides. So I think we're on a path right now where we're going after E at the expense of S.
Thank you. Thank you for making that point, and hopefully we can remedy it. Mr. Theodoro, when I think about pricing risk, you've committed a lot of work for it, and I just wonder if you could highlight some of the issues that we're confronting in the insurance space.
Yes, thank you, Chairman Davidson, for the question. Indeed, the price of reinsurance has risen in the January 1st renewals, the June 1st renewals, and the July 1st treaty renewals. And it's a major part of the costs of insurance policies after administrative expenses and claims is the cost of reinsurance. And it's getting higher. The good news is that there is capital out there that's coming in, private capital, pension funds, sovereign wealth funds, other asset owners.
I appreciate that, and I just have to get one more question in. But part of the problem for insurance is if you can't insure a site that you're going to develop, it's hard for builders to do it. And if you can't get the cover to provide for the market, Briefly, Ms. Huey, could you highlight the challenge there?
Yes, thank you, Chairman. On July the 1st, FEMA halted parts of the mapping program under the National Flood Insurance Program. Home builders getting conditional letters of map revision and letters of map revision to prove that homes they built are no longer in the floodplain requires the home buyer to purchase flood insurance. By delaying this program for an indefinite period of time, we have a great fear that this will only increase the cost of homes. It's unclear how many future communities and homes.
I apologize, Ms. Huey. Thanks for getting as much in as you could. My time has expired, and really appreciate our witnesses for traveling, for being here, providing your expertise, and I thank my colleagues for spending some extra time understanding the impact on this issue. I hope it will inform future legislation. And with that, this hearing stands adjourned.